Capitulation has now taken place in the stock market. We've just had a number of high-level Wall Street analysts calling the bear market is officially over and advising us to start buying here. Why? Because this rally, they claim, has legs and we can go and we will go a lot higher from here. Guys, this is normally what happens at the top of a rally. A lot of analysts, high-level analysts, will capitulate. They will start buying, advising everyone else to start buying as well, just before they pull the trigger to crash everything down. Guys, we are just entering one of the most important week of our lives in the stock market. We are just entering, guys, a crucial week for the stock market. We have high-level economic news and we also have the quadruple witching event happening on Friday. Guys, so much to talk about in today's video. Make sure you watch until the end. And if you do enjoy today's video, guys, please give it a like and share it with anyone else that may also find this useful. And if you are new to the channel, please consider subscribing. We do bring out the latest stock market analysis outlook every single Monday morning. Now guys, I just wanted to start off by looking at the S&P 500. This is the real chart of the S&P 500, and as we've discussed in previous episodes, we've reached our target, or we're just about to reach our target to take the high of the August high, to take the liquidity that is resting above this area here. Now, we've discussed previously in previous episodes that we have a number of gaps that have not been filled. More importantly, we have one gap left to fill right at 4,400, and we have so many, guys, so many gaps to be filled at the bottom here. We've had a massive rally, leaving a lot of gaps unfilled. Normally, when that happens, the market has to balance itself out and come back down to fill at least some of those gaps. We have one gap at the top, and we have about 1, 2, 3, 4, 5, 6, 7, 8 gaps, guys, to be filled at the bottom. So normally when we get that distinction, that correlation, normally we will get a pull back down to at least fill a number of gaps. So this is something to be watching over the next couple of weeks, guys. In my opinion, I think we will take this August high, we take the liquidity resting above here, then we go back down. And what a better time to go back down than the biggest economic news this week. We have a number of economic news that we'll go through in just a second and discuss. And just before I go into that, guys, I just wanted to show you this chart over here, guys. This is the S&P 500, and as you've seen just at the beginning of the video, we are now in extreme greed. And all I've done on this chart here, we've labeled the extreme greed, and we've also labeled the name exposure index. Now what this is, guys, is this is the exposure of the fund managers. How exposed are they to the stock market from 0 to 100? Now you can see that in blue, and in red here you can see the fear and greed index. Anything over 70, guys, indicates an extreme greed level. And you can see, guys, now we have a 90 reading on the name exposure index. So the fund managers are almost fully allocated to the stock market, and we have an extreme greed level of 77. Now previously, when we got similar readings to this, guys, this is going back since 2022. When we got those kind of readings, it was followed by a pullback down in the stock market, in the S&P 500 and the stock market, the broader stock market in general. So this has happened in 2022, at the beginning of 2022. Then we had that in March last year. We had that in August last year, and so on. So you can see that, guys, that every single time we go those kind of extreme readings, it was followed by a pullback down in the stock market. Now what could cause a pullback, and we've discussed this a number of times in the past, but what could cause a pullback is a catalyst, and the catalyst can come as soon as this week, guys. We have a number of economic news to be aware of, starting with Tuesday, guys. On Tuesday we have the inflation data in the US, guys. Now let's just go back a little here. Now we've discussed the FOMC, the Fed meeting is on Wednesday. And the Fed meeting, they've signaled that they will pause. They will not hike at this. They will not raise interest rates this meeting. They will pause. They will just literally wait, don't do anything, and wait for more data to signal what they should be doing. Now we got 2 weeks ago, guys, we got the non-farm payrolls report, which came in very hot, indicating that the Fed should raise rates. Now the Fed said, listen, we're not going to do that just yet. We need more data to see. Well, more data it would be the inflation data. If the inflation data comes in also very hot, I think they will have no choice but to hike. What can be the problem? Well, the problem here, guys, is that the Fed is in the blackout period. They're not allowed to communicate with the market, with the media, officially through official sources. So if this comes in very hot, they may want to use some of their whisperers to communicate that they will raise rates. And watch that, guys, because if they do that, the market can just literally crash at any second. Obviously, if the inflation data comes in very low, then the probability is that they will not raise rates. Now the inflation data, guys, is something to be watching very closely on Tuesday. Now we've had a very surprise hike coming from the Bank of Canada last week. They were meant to pause and they actually did hike. So something that the US may also, the Fed may also do in the US. On Wednesday, we have more data, more inflation data. Okay, something to watch. And we have the most important data. We have the FOMC meeting. We have the FOMC meeting, guys. Watch the interest rate decision. Okay, as is mentioned, okay, they are not expecting to raise rates. They're expecting to pause. There will be no change in the inflation, in the interest rates. Apologies. We also have the dot plot. Some guys, very important to watch the dot plot. Our students, remember the dot plot. If not, go back and watch your lessons. Yeah, very important there. Watch the dot plot as well. Now the day doesn't end there. Okay, the economic news doesn't end there. On Thursday, guys, we have more data. We have the retail sales, which will tell us whether we are entering a recession, whether the US is entering a recession or not, or the consumer is still very strong. And then on Friday, we have the quadruple witching event, guys. We have so many options expiring on Friday. Very important. Be very careful trading on this day. And we also have what? We have even more economic news, guys, with the Michigan consumer and sentiment on at 3 o'clock UK time on Friday. So guys, last week we had literally no economic news. The market went higher. What will happen this week? Now, looking from a technical analysis point of view, let's start looking at the charts here. Now, guys, starting with the S&P 500, we've discussed this previously at the beginning of the video. I'm looking at the August high to be taken here, guys. We are very close to take the August high. The liquidity resting above here. This is resting at 4.325 or so. I'm looking at this to be taken, and it will be very important to see what the market wants to do then. Looking from a 1 hour perspective, guys, we are going higher on negative divergences there, so pullback would make sense here. If we do go up higher, if there's no reaction after we take that liquidity and the market moves in even higher, then watch the, let's put this here, the upper expected move for the week and for the month, guys. Very important. They are both at similar levels here, going into 4.350s. Now if the stock market does want to move even higher, guys, okay, they can go and take the liquidity resting at 4,500. Now, guys, I think that's very unlikely to do so, okay, unless the inflation data comes in 2%, okay, which would be something impossible, but you never know. Unless that happens, it will be it could be a seldom news event, guys, okay, in which everyone, even if the inflation data comes in a bit cooler than expected, they may want to just use that as an excuse to just crash the market regardless, okay, because we've had such a massive move, okay, lately. We are at extreme levels, so they may want to use any excuse they can to just literally crash the market. So be very, very careful, guys, this week. Next, we get Apple here, guys, and we completely 100% smashed and called this the top last week. I said in the last week's video, guys, that Apple had its they were going into their event, you know, they were going into their yearly event to showcase and to come up with their new VR set, and I said that that could be used as a sell the news event, and that's exactly what happened. We took out the liquidity on the daily, we went to all-time highs, and literally when the announcements came in, we crashed from there, and we haven't been able to take that high since there. And that's a very important thing to know there, guys, because as long as we are able to hold and not take out this high, then we will go down and at least try to fill some of those gaps here. We have a number of gaps that have not been filled here, so if we don't manage to take out the high, then most likely we will go down. Watch the 20 EMA here, has been acting as strong support here. Watch for a close below the 20 EMA. Very, very important, guys. Next, we get the UK 100 here, guys. Now, the UK 100 hasn't done much. It's had a reaction, as we've previously mentioned, of this daily IC. I'm still looking at this liquidity here to be grabbed, sitting at around 7,327 or so. But we are actually, if we go on a 4-hour time frame, guys, we are actually developing an inverse head and shoulders here. So as long as we are not able to close above this level, then we can go down. If we do close above this level, guys, then the inverse head and shoulders can kick in, and we can go a lot higher to try and at least clear the liquidity resting above those highs, sitting at around 7,926 or so. So very important. Watch this out this week, see how this will play out, guys. Very, very importantly. Next, we get the DAX here. Now, the DAX, guys, hasn't done much. We're still in this consolidation here. We've taken the liquidity and we are literally just consolidating there. We did give out this trade over here last week. Last week we were here. We did say if we take out the liquidity, I'm expecting price to go lower, and this is exactly what happened. Price went in lower to this 1 hour IC here. Had a nice reaction, then it went up higher to take this liquidity this morning. I was expecting price to go a bit lower to take out this liquidity down here, but we did take some profits here as well, and hopefully you did too as well. Now, guys, we've taken a very important liquidity area here, and we have some liquidity resting below this low here, so I wouldn't be surprised for price to go and clear that liquidity. The ultimate target would be to come down here and take this liquidity. Take profits along the way, guys, okay, because there's going to be a very, very volatile week. Be very careful there. Next, we get US 30, guys, and on here on the Dow Jones, we have the market has been going higher. We are here on the 4-hour time frame. The market is going higher on negative divergences, and we do have this liquidity resting right here. So a move higher here wouldn't be surprising to go and take that liquidity, and then if we still have those negative divergences, perhaps will be close to overbought as well. That will be interesting if you can get a nice short position from there, guys. Last week we had some nice trades over here. We went up higher took that liquidity, came back to this hour 1 hour IC, and then we went straight up higher from there. This 1 hour IC has held up beautifully there. Okay, you can see how we literally just consolidated here, and then boom, we went up higher. If we do take and close below this level, guys, okay, at any point, I'll be looking for a pullback up into some sort of IC, and then I'll be looking for price to go and take some more of this liquidity there. If you go over on a daily time frame, we do have this liquidity resting above here as well, so please make a note of that, sitting at 34,271. So bear that in mind as well, guys. Next, we get the US 100, the NASDAQ. And guys, here on the NASDAQ, we've mentioned that previously, but we are very elevated from the 20 EMA on the weekly time frame. So guys, normally when we get so far away, so further away from the 20 EMA, price either needs to consolidate here or we need to have a pullback. Now last week we did get a doji, we did get a consolidation week, and now we are going higher to start the week. But again, it's going to be a very volatile week with a lot of things that can happen. I wouldn't be surprised to see a pullback here, guys. We've been on a monster run over the last couple of weeks. We haven't had a down week, in a very long time. So I wouldn't be surprised to see this being the first down week, with a potential to continue going lower. Now we are getting divergences. We may be getting a sell signal. Now we normally, when we get a sell signal here, and we are not that close to the zero line, we will get we should get a nice move down if that is to happen. We haven't got that yet, but any red day will give us most probably the sell signal, so watch for that, guys. Okay, that first take profit should be this daily IC here. Okay, and if we do close below, then we'll target some of the liquidity resting below those levels. But for now, guys, we are going higher on negative divergences. We are very overbought as well. So guys, this is very important here. Now I'm just gonna be honest and say, listen, I'm not here to say buy now and just chase this rally. Yes, you can. Scalping, guys, you can do anything, buy or sell intraday. But from a longer term perspective, you need to be tactical. I'm not saying that the market will crash, today, tomorrow, and I haven't been saying that for the last couple of weeks. I said there's a risk out there, okay, that the market can pull back lower. You need to be tactical. You don't have to go all in. Even though we are at extreme greed, the market can stay elevated, can stay cannot make sense for a long, can stay irrational for a very long period of time. So we don't want to go against the market unless you be tactical. Okay, you can enter small short positions and then increase your shorts as the market, and if the market goes up higher, but don't go all in. If you are scalping, then yes, you can do that intraday. If you have more questions about scalping, guys, we received some very, very positive feedback about our scalping course, scalping masterclass that we've introduced a couple of weeks ago. It is literally life-changing. So if you have more questions about it, more questions, go back to the website mcitradingacademy.co.uk, write us a message, ask us anything you want. Okay, the course is life-changing. Don't miss out on this opportunity. Carry on. The VIX. Now the VIX sits at its lowest it's been in a very, very long time, guys, in more than 2 years now. The VIX sits at its lowest it's been. We have extreme greed and we have very close to extreme exposure from the fund managers. Now guys, this is not the place to go in all in long. Okay, the market can still go up higher, yes, of course it can, but I think the upside is very limited at this stage. So be very careful when a crash, if a crash does happen, it can be very quick, guys. Okay, it can be very quick and it can take you by surprise. Okay, so watch out there. We did open up with a gap higher, so I wouldn't be surprised to see this gap go back lower. We do have a number of gaps here that have not been filled. So any sort of event, and there's so much going on this week, that can cause a massive spike in the VIX. Next, guys, the DXY here. Now, the DXY has not done much over the past week, has been literally consolidating at this daily IC. As long as we are able to not close below this daily IC, then I can see us going higher to try to take at least this high over here. Again, with the economic news this week, this is very likely to happen. Next, gold, and again, gold hasn't done anything. We have a target here for price to get all the way down to 1916 to this daily IC. Maybe we can get a long, enter a long from there. But as it stands, guys, we are in the middle here. There's nothing to get excited about unless we go make a new high or we go to this daily IC here. And unless that happens, there's not a lot to talk about on gold just yet. Bitcoin, guys, we had so much Bitcoin news, not Bitcoin, but cryptocurrency news last week with Binance getting sued and also Coinbase getting sued in the US. So a lot of crackdown on those cryptocurrency firms, which has not helped Bitcoin at all. And it's exactly what we've been expecting, guys. As I did say that as long as we are not able to have a massive move up higher from taking this liquidity, then we either consolidate or go lower. Now the first target here would be this daily IC sitting at around 24,647, and if we do close below that, then we go into this daily IC here. As it stands, guys, there's nothing to get excited about cryptocurrencies, and if the stock market does move lower in the next couple of weeks, I don't see this being a positive for the stock market, especially as the NASDAQ has been very, very overbought now, getting into some extreme levels that wouldn't bode in well with Bitcoin here going higher. That's pretty much it from me, guys. Thank you very much for watching. And if you do have more questions, or if you'd like to learn more about the strategies that we use or about the ultimate scalping masterclass, then send us a message on our website and we will get right back to you. If you like to join our Discord community, you can do so via our website. It is free of charge. Thank you very much, guys, and I hope you have a great trading week.